Thank you, everyone, for attending today's call. We appreciate you coming online in this short notice, but we have an agenda that we must follow and give you some information. Bill Menger, are you ready to start with us?
So I want to thank all of you for joining us today. I think this is one of the largest number of lenders we've had on one of these calls. Certainly, we are living through extraordinary times right now, and we appreciate all of your efforts to make loans to the small businesses that are having a very difficult time right now with making payroll, making mortgage payments, making rent payments, making utility payments. And I just want to, again, let you all know that where we are here in the fiscal year, we still have authority to make available $18 billion. That's $18 billion until the end of the fiscal year. And as Jovita Carranza, our new administrator, said last week at the White House to the President, she wants to leave no money on the table. So, again, we're relying on you, our 7A lenders, to make sure we are getting capital out to the businesses that need that. As you know, in the 7A program, if you make loans up to $150,000, there is an 85% guarantee on those loans. You can make an awful lot of loans at that level with an 85% guarantee. So, again, we just want to encourage you all to do everything you can to help the small business community during these times. We are obviously also being very active in making economic injury disaster loans. Those loans go up to $2 million to small businesses that have obviously been affected by the economic downturn. And, you know, we are probably going to have all 50 states declared very shortly here, and that office is getting extremely tough and has a huge volume to deal with. So, again, anything you all can do to help us as well, making loans to your existing customers, you know, or others in your community, we certainly welcome that. So with that, really, I just wanted to kick it off, and I will now turn it over to the next speaker. But thank you all, and I hope everyone stays well, and we all have to do the best we can.
Thank you, Bill. Diana?
All right. Thank you. This is John Miller. Let me just jump in here. I just wanted to give an update on Capital Access. We are fully operational. We have about 80% of our employees teleworking from their homes, and that includes our centers. Our centers are processing loans, origination, servicing, and guarantee purchases, so we're fully operational. I would say to all the lenders to remember to use your unilateral authority when processing deferments. That means you have the authority to take the action on your own. You do not need to call into one of our centers. In fact, we would ask that you do that because our centers are, as you can imagine, getting a high volume of calls. And we at the SBA will employ a great latitude when it comes to providing relief for borrowers. So document your loan files. We do understand that you may not be able to obtain documentation for the deferment. Just state clearly in your document, or whether it's a request from a borrower or a CRON entry in your system regarding the virus. And as of right now, again, we have disaster loans through ODA and our regular loan programs. And with that, I'll turn it back to Michelle.
We want everyone to have that on you.
If this is just a reminder, I'm sorry, thank you, John, for providing that information. But I do want to remind everyone to please mute your phone because this is a large amount of people on the call. So if you can do that, we would appreciate it. John, thank you so much for giving us that information. Diana Seaborn, you're next.
Great. Thank you, Michelle. Good afternoon, everyone. Just an overarching few statements about the situation. We are, as you know, unfolding new events and opportunities every day. We appreciate that you are sending in via lenders, via, individuals, via the district offices, information every day that we need to know, and we want to encourage that. If you're experiencing unintended consequences, we certainly need to know about that. We also need you to know that we're on it. It takes patience. We have people on deck almost 24 hours a day in CAP Access now, working through to get formal notices out to you on issues, answer questions, and to make sure that our leadership considers all those things that are impactful to you. So, I would ask that you be patient and understand that everyone here is 24/7, and we also have a team that we need to protect their health and their well-being, and so there is, to John's point, a lot of folks on telework. So today's agenda is going to walk you through what many of you already know, and that's what you have available to you now. We have someone from the disaster team who's going to walk you specifically through the economic injury disaster loan process. And we have folks from all of our team, from OPRM, from OSPO, so that you have the ability to ask a question about servicing, a question about reviews and how that's impactful to you. And we won't be able to capture everything in this call, but we will continue to provide written guidance through information notices and Federal Register notices. We have several in play, and the team will discuss those to some degree with you today. So thank you very much for your investment in your customers and your investment in our programs and working with us to get, this economic impactful scenario to the best place possible for everyone involved. So thank you, and Michelle, we can go ahead and start with the general program.
Okay, thank you. We have Rosemary Drake on the line. Rosemary?
I'll put mine on mute.
Rosemary, are you on with us?
Yes, I'm on. I'm on the call. I apologize. I included Bob in the call, so you would like me to talk about the 7A deferment process for our existing borrowers. So again, as Diana was mentioning, team was mentioning, you have the opportunity to extend deferments for loans that are not sold in the secondary market up to 6 months. You can do this under your unilateral authority. Again, you do need to make sure that you document your file and you look to see if the borrower does have the ability to repay in the future. So there's a couple of things that you need to make sure that you understand, that you currently have a borrower that's not in liquidation, that this would not apply to a borrower that's currently in liquidation or a borrower that's already having some issues. So you want to make sure that you're looking at your borrowers that have the immediate need and that you're assisting them with a deferment and in the event that they need temporary relief from cash flow issues right now. Also, if it is currently in the secondary market, you also have the ability to provide a one-time deferment. If you've already used that one-time deferment, there are some additional steps that you need to do. I'm going to defer to John Wade to talk about the secondary market, as he can give you further guidance on your requirements for the customer service online requests and the deferments for up to 12 months. On that as well. So John, are you there?
I am. I didn't think that was me, but thank you very much, Rosemary, and thank you everybody for getting on this call. It's very important for us to be able to give you the guidance that, like I say, gets us through this, because I think we're going to all get through this just fine if we all just kind of stick together and follow the rules and the scripts as we go. Now, those lenders seeking deferments on loans that are sold in the secondary market are asked to file your request to the SBA through the Customer Service Online Request feature, or the CSOR feature, under the sign-in option that's on the Colson Bank of New York website listed here on the slide. Now, usernames and addresses are issued, or that have been issued, for the 1502 Connect, the loan list, or PSU applications may be used to access this portal right away. I guess it doesn't like my answer. If you haven't signed up previously, that's okay. Colson stands ready to process all new enrollments and to get your access rights to the self-service feature set up right away. Advise these requests can include the one-time 90-day unilateral deferment as well as those requests for deferment that are less than or equal to 12 months. Be advised, those specific loans in the secondary market that you're going to place in deferment will need to be coded as a status code 4 in the 1502 report. This is the status code associated with deferred loans, and it's an entry you place on the 1502 and will begin doing on the 1502 for the initial month and each subsequent month until the deferment period expires. The next installment due date on that same 1502 for that same loan and deferment should be the day of the next scheduled amount of principal and interest is when it's expected. The interest paid due date and the guarantee balances should be listed as of the date of deferment. Now, we're currently working on plans to address the late form 1502 filings. We have a pretty good sense that this is going to be coming to roost here in the next couple weeks, and the related late fee issues for loans sold in the secondary market. We will be issuing written guidance next week, and we'll be hosting lender webinars to provide the additional support and guidance to all of our market participants in this program. We appreciate, I can't underestimate this, we greatly appreciate your continued participation in this. We've got a lot of borrowers out here who are looking for your help. We stand ready. I know you are ready. We're going to get through this together. Thank you. I'm going to turn this back over to Rosemarie. I'll probably pass it to Michelle. Thank you.
I will. Thank you so much, John. We appreciate that additional guidance. We're working on additional guidance when it comes to the no adverse action and your requirements, so we will work with you on that. I know a couple of lenders have had questions regarding financial projections, operation plans that they're asking for from their borrowers. Understand that just like you are with your contingency plans and working for operational changes within your organization, our borrowers are doing the same thing. We ask that you provide additional guidance to your borrowers on what you will accept, and then work with them to do this as expeditiously as possible for your borrowers. So we'll provide you additional guidance. It's coming as we work on it 24 hours, like Diana was saying before. So we'll go to the next slide, and Diana, if you want to add anything, please do at this time.
I'm with you, Rosemarie, and one more time I'm going to ask you guys, I know that this information is extremely important to you. Please, anyone who's new on the line, mute your phone so that everyone else can hear for the benefit of their customers, all the information we have to provide here today. Now, one note, Michelle, we are going to be able to provide this to all of the participants on the call. After the call is over, I believe we get a list of participants. Correct. And we'll be able to make sure that the slide deck is available for anyone who is on the call, so you'll be able to have it to refer to.
Thank you. And Linda Riley, we have the reminders on the deferment to the 504.
Yes, and we do have upcoming guidance on the web exchange, nothing to report today, but we've issued one notice on deferment. We have a new notice that's coming in. I'm going to have Marty Andrews and the OFPO team talk a little bit more about this. We also understand that in the CDC industry, it might have been a while since they've had to work through deferments and catch-up plans, and so Marty is going to be working with NACCO to set up specialized training, and they're going to be having coordination as early as this afternoon to get that in motion. Marty?
Yeah, thanks, Linda. Yeah, so Linda mentioned there's a notice coming out. There's a procedural notice that will be coming out in the daily today, the SBA daily, that will make it easier for CDCs to provide deferments to their borrowers. We're going to allow them to get the deferments in place and then do the catch-up plan and all the analysis that's required within 6 months after granting the deferment. So hopefully that'll be able to, that will help the CDCs be more responsive to their borrowers, and like Linda said, we'll be shortly on a webinar to refresh everybody's memory about the deferment process. And yeah, so Zach, I could give a little update on Sacramento. They're all systems go. They're teleworking. It's a new world for them. So they're adjusting great. I talked to Ian this morning, and production out there is surprisingly high, so we're really excited about that. They are receiving a lot of applications, so we do ask for your patience. They are working full time and getting through those, and also we're getting a abnormally high number of requests to expedite. So we can't expedite everything, so we're going to process things in the order they come in,
and also too, if you've got a third reconsideration request, that's not going to be the top priority right now. We've got to work through the emergency notifications. We care, but we do have to triage.
Thank you, guys. Diana, want to talk about the bridge loans before we?
Sure.
Okay.
There's a couple of notices in play before we talk about the express bridge loans, but one of them is with regard to wet signatures on application documents only. We haven't moved forward to addressing closing at this point, but with regard to signing documents that need to be originals, we are working on a notice that should be posted early next week that permits the scanned signatures with identification verification to be used. So that guidance will be in writing and out to you early next week. The caveat on that notice is going to be that, for federally and state regulated institutions, you are still subject to whatever requirements they have for the protection of PII, so the personal security of the information for your customers. While SBA is willing in this short run to take scanned and fax copies, and that will be clear as far as the procedure in the notice to come, you're still subject to whatever your providential regulator requires with regard to security. The other notice that we're working on benefits the 504 program with regard to the statement of no adverse change, and it will also incorporate guidance on financial changes that negatively or adversely impact for 7A loans as well. We understand that it's very difficult to make a statement that there's been no adverse change when, in fact, there has. So we are working on a notice also to cover that, and that will likely be available hopefully by the first of the week. We have David Glacken with us, who is leading the agency's efforts in coordinating everybody with regard to the command center for the coronavirus emergency, and he's facilitating everything we need just as rapidly as he can. You know that it takes us weeks to get things through. We have an expediter in David, and we very much appreciate that, and I know you do too. It's particularly important now. So we will continue to look at what formal notices we need to provide, and you'll be seeing obviously a continuing series of those as the issues come up, and as any legislation and opportunities present to us to provide support and financial assistance through the Congress and the administration. So on to the express bridge loans, my favorite little baby from the disaster several years ago. We have submitted, or will be submitted today, to the Federal Register. You should see it Monday, maybe, or maybe sooner. David's shaking his head, and we're getting really good traction on it. We are modifying the requirements to permit the express bridge loans, which are the $25,000, very little doc, move forward on it, gap lending to this emergency. Even though it's not a declared disaster, we're modifying the requirements to permit it under a nationally declared emergency as well, and specifically for the coronavirus emergency. These loans will be eligible to be taken out or paid down by an EIDL loan, an economic impact injury disaster loan. Oh, gosh, I can't even remember our own acronyms now. So they will be, regardless of any guidance in our permanent SOPs to the contrary, any interpretations that may happen to the contrary, these loans, if you make an interim bridge to your customer to get them stabilized while they're looking for an EIDL loan, they will be able to use loan proceeds to pay down those loans. And you know the alternative is to have a 7-year term payout on those loans in the alternative. So not much else has changed from the program guide, but right behind this Federal Register notice will be an update to the program guide and an info notice that highlights the changes for the purpose of the coronavirus emergency declaration. So stay tuned for that. And I think, do we want to answer a few questions before we get into our guest speaker from ODA?
Oh, no, we have Eddie Ledford up next. So we can wait, if we could, until the end. I just have another comment to let everybody know that we have included a link for the lender match, because I understand that there are a lot of people who are going to lender match to try to get funding. Again, as Diana indicated, our bridge loans are not eligible to be used at this time. The only assistance is through the Office of Disaster Assistance, and through Lender Match, they now have a link to take them right there. And I'm sure Jerome Edwards, who's going to be on the call a little bit later, will be able to give you more information about that. So we're going to move on to Eddie Ledford to discuss some more of the deferments that everybody is so interested in. Eddie, thank you for being here.
So, welcome today, everybody. So what we've done in the Office of Credit Risk Management is we're kind of in the same situation as you guys as lenders. We're looking at all the different SOPs and the guidance and the notices are coming out and determining the best course forward for, testing and really looking at what prudent management of the portfolio is. So I'm not going to read the slides to you. What this really is an aggregation of information for you. We start out by, kind of explaining the Apple CFR and SOPs. So if you have questions, those are good points of reference. Now, as you go through the bullet points, you'll see, the second bullet point talking about financial information should be reviewed. There's no mandate there. There's a lot of requirements or questions that we're seeing come in that are stating, things to the effect of, financial information is required. The SOP has a should there. What we're looking for in that instance is that you employ prudent servicing actions. When we're working at it from my side of the house, which is the federally regulated lenders, we're having a lot of discussions with the primary federal regulators right now to determine what prudent is. Whether it's case by case of the deferment, if they're using, if the lender's using credit scoring or full underwriting, blanket, but those discussions are still going. So make sure that you have those conversations. If you're federally regulated, that you're having conversations with, the FDIC, the OCC, NCUA, and so forth. As we go to the next bullet point there, the third one on the page, again, it's just more basic information that we pulled in from the 5057 too. So as we go to the next slide, this starts giving up one. There we go. As you look at this slide, this is kind of what John Wade spoke about earlier. We're just giving everyone kind of in one place the information about, SBA and investor approval, whether it's sold in the secondary market, and then also if you have things sold in, so if it's held in your portfolio or if it's held in the secondary market, how you have to treat that. Now, one thing to be aware of is on the 7A lender matrix, this is a unilateral action, and so SBA notification or approval is not required. So please be aware of that as you process these. The next page, I think you skipped one.
Don't cut Eddie off here.
Yeah.
Very sensitive point. You
go back up.
These lenders.
That was the one we were on.
No, go up. Okay, so this.
All right, Eddie.
There we go. Almost there.
Finicky guy.
There we go. On the mouth during the deferral period.
They did change it again.
Yeah, something's going on with the slideshow, but anyway. The next couple of slides there are really talking you through the reporting and the expectations there. From the Office of Credit Risk Management standpoint, what we typically see with lenders is, they do the deferment, they document it correctly, they work with the borrower to get the modification document, they report it as a 4 on the 1502 report, and then they fail to report it correctly after that. So be very careful at this point, take credit for the work that you've done. You've worked with the borrower. You've developed a good strategy. You put the modification in place to do a deferment. At this point, make sure that your reporting is correct. so that when we look at it and we monitor it, we're aware of it, and I'll talk about the importance of that in just a second as far as the risk-based review. So one of the questions that's coming up quite frequently is, as you guys know, we use the Paris protocols for our risk management. One of the scored metrics is the stress rate. The stress rate incorporates, past due, delinquent, and deferred loans. So, as these deferrals increase, we're going to see we expect to see an across-the-board increase in the stress loan rate as deferrals feed into that. Now, from a risk-based, there's two areas to look at here. From the risk-based review standpoint, for you guys that have gone through it, one of the questions in the needs list asks about whether or not your primary market has been affected by a disaster. Now, we're going to expand that disaster verbiage, going forward to be, emergency declaration or major disaster declaration. But what we want to know there is, have you been impacted? Historically, it's been markets that had, hurricane activities or flooding. When the lender provides that information to us, we make adjustments because we look at the data, we take into account whatever the disaster or, the adverse impact that was uncontrollable happened, and then in the report, we'll make a comment similar to what you'll see on the screen next. So we take it into account, we see exactly, what happened in the portfolio performance, and then we make a statement to that effect. In some instances, lenders will have nominal or no effect on their portfolios. In other cases, we'll look at it before and after. So we're looking at it from before the disaster and then after. So one thing also that's coming up is as you look at your portal, and the portal is going to have that, that outward-looking screen that your executives will look at, and they're going to see an increase in your Paris score. We're currently having discussions with the contractor who handles the portal for us and looking at some ways that we can adjust that score to take into account the deferrals. We've done this in the past with like Puerto Rico, which is affected by the hurricanes. So we have a history of making some adjustments. So we're going to go back and revisit that. So I expect we'll have some information on that over the next couple of weeks.
Thank you. Thank you, Eddie, for providing that. Before we go on to Jerome, Diana, want to share?
Sure, thank you. David Glackham has given us some good news this morning and wants us to encourage you to continue making the 7A small loans, with your under your current authority. We have agreed to, I think David has negotiated that we can permit you to do those 7A small loans automatically with a 6-month deferral at the front end. David, is that?
Yeah, well, under current, so I just want to emphasize as we're about to hear, and thank you all for having me in here, and thank you to all the lenders on the call. I just want to emphasize as we're about to move into EIDL, and we heard a little bit about the bridge policy we talked about earlier that we hope to expedite and get up so that y'all can make those types of loans. $18 billion left in our just 7A right now. So notwithstanding anything you're hearing on the news, notwithstanding any of these other resources that might be coming, which we know there's a lot coming at everybody all the time, we just want to stress that we need lenders out there using their current 7A authority to make loans to businesses that are in need to the extent possible. So you just heard from Eddie and how Okram's looking at this stuff, and how our current regulations allow for deferment, and we're about to hear about EIDL, which is great. That comes out of SBA, but I can't urge enough, and we're talking about this with a lot of people here in Washington, the available money right now at the $18 billion left under our current authority, and using our current programs and your current authorities for preferred lenders and delegated lenders and express lenders and everything else to use that to get capital to these small businesses that need it. So I just wanted to stress and raise that while EIDL loans are out there and while we're working on this bridge loan product, just keep in mind, and I know you all have this front of mind, 7A is there, and we want to make sure we're using it to help these small businesses to the extent we can. So I just appreciate y'all letting me have a couple of remarks here and everything y'all do to support the small business community. So
great. Thank you, David.
Thank you, David.
So maybe we need to take just a minute, Michelle, now to answer a few questions before we bring the star of the show on, and that's Jerome from the Office of Disaster Assistance. Thank you. Can we take a look at some of the questions that have been submitted?
Okay, and if anybody has any questions for Eddie Ledford, for Jehoon Kim, for Linda Riley, Diana Seaborn, please raise your hands now.
Good for those TDCs that are on the call, Eddie talked about 7A. We're working with Paul Kerwin on how these changes might impact your SMART score. We're going to incorporate that in the servicing training that we're doing with that.
Okay. Is a question for Eddie? No? Okay. What we had other questions. Can we not see the questions? Scroll up to see the questions. Okay.
Okay. Here, Eddie, question. Okay, we have a question for Eddie that indicates, for those of us who just completed our review, how do we notify you that we were impacted by the market event and not have our Paris score negatively impacted?
Yeah, so right now we're actually using data that ended December 31st, 2019, so we're using Q1 2020. So we actually won't see the effects to your Paris score until after the March 31st data proposed, which will be what we call Q2 FY20. And we actually won't start seeing that data until about mid-April. So for now, your Paris scores will remain unchanged. They are stagnant based on the 12/31 data that was provided.
Thank you, Eddie. And I know we're getting a lot of questions in here in regards to the deferments on whether or not they have to physically review and discuss the financials as indicated in the 5057 for deferment.
No, I mean, right now the 5057 states that you should get a financial. So how we're interpreting is that in this kind of hardship situation, you, not a must, you indicate the file as it's a hardship situation because of COVID-19, and you grant the deferment.
So that's for the 7A says should.
Right.
7A rules and the 5057 say should.
Should.
And, of course, we would not advise anybody not to be prudent about that decision.
Right.
The more you explain in the file, and nobody's asking you to write a book, but the more you acknowledge in your records when Eddie comes to review or the team comes to review, and they see that these decisions were made in the context of the coronavirus emergency, then that explains a lot about all of what's going to happen with these loans. So I would also encourage you to give thought to that decision. So sometimes throwing good money after bad is not okay. You know that better. You work with your customer, and if you make the decision that the deferment and or other tools that we provide to you are appropriate, if you document that, if you make modifications and that's in the record, then certainly Eddie will be understanding of that, and he will provide guidance to his team on how to reflect on anything that's mentioned in your file with regard to the coronavirus. Okay, another question?
Mickey, do we have anybody with their hands up?
Ladies and gentlemen, to ask a question on the phone, press #2 on your telephone keypad.
Okay, in the meantime,
your line is unmuted, and then you may ask your question. Going to our first question on the phone. Caller, your line is unmuted. Please state your question and your name if you like.
so while we're waiting on that comment, let me just make an overarching comment with regard to loans that are approved and in the process of closing, having had first disbursements and the concerns around that. We are working on how we put together the formal advice on that through a notice, and we would ask that you be a little bit patient because we have to work with the Office of General Counsel and the Oversight and Risk Management team to understand the impacts and how we need to proceed. But we fully understand the dilemma is that when you're in any business that cannot open because of federal or state mandated closures, that it's very difficult to say that there hasn't been adverse changes, that there's no economic impact to the business, and there are concerns about doing that. But knowing that we're all in the throes of this crisis, we're working to see what guidance is reasonable and what gives you sound footing to proceed where you need to fund loans.
And, Mickey, you said you have somebody with their hand up?
We do have a few questions. Going to our first question. Caller, your line is unmuted. Please state your name and your question. Going to our next question. Remember, if I say unmute your line is unmuted and you may ask your question. Going to our next question. Caller, your line is unmuted. Please state your name and your question.
Hi, my name is Jessie Crawford from Greater Texas Capital. We're a CDC, and our question is if a 504 borrower of ours has had a previous deferment and they're now on catch-up, are they still eligible for this unilateral authority 6-month deferral?
It's a good question. We're in the midst of reviewing that possibility, and we're working with CSA as to how we could do multiple catch-up process built in. But again, we'll provide additional guidance on that.
We are looking at that because the question is, is it a second and separate one, or do you have to go back and review it in its entirety and modify the existing one? So we understand the concern, and we are looking at generally for loans that have been on deferral in the past that are back in regular servicing, there is no problem in getting another deferment. Is that correct?
That's correct. Now, this one that we have, they're in catch-up.
Yes.
And we need to evaluate how that's going to impact the logistics of having a two separate catch-up plan, or can we amend the existing catch-up plan to accommodate the additional deferment. So we're hoping to get that information out to you.
So be patient, CDC folks. We are looking at that. We understand it's an issue. If you have someone in catch-up mode right now, we're working to see what guidance, which direction we need to take with the guidance. So soon to come.
Thank you. And at this point, because of time, we're going to have to go to Jerome Edwards from the Office of Disaster Assistance, and we'll complete your questions at the end of the call. I want to get Jerome, and I know he can answer a lot of these questions for you. Jerome, you're on the line.
Hello.
Can you hear us, Jerome?
Can hear you.
Can you hear me?
Yes, we can. Thank you for coming on the call today. I realize you are very, very busy down there, and we have a lot of lenders who are interested in helping you out. So if you can provide them with some information, we'd appreciate it.
Okay. So let's get started. The first thing is this disaster is not a major disaster declaration. It's not a national presidential declaration as we did with 9/11. We are using the governor certification method, which requires each governor to certify there are 5 businesses in the state that has suffered economic injury. They go through our process through our field office centers, one in Atlanta that does the eastern half of the United States, the other one in Sacramento that does the western half of the United States. And it's sort of a tedious project, but we've streamlined it, so it takes each governor office to complete maybe 2 or 3 days, and then once it comes here to the Office of Disaster Assistance and we have the documentation, it normally takes us a day. However, since we're receiving so many at the same time, it's taking 2 to 3 days. And each declaration has to be signed by OGC, signed by the Social Administration Disaster Assistance, and approved by the administrator. So at this point, we have received 43 requests, which includes the District of Columbia, and we have approved and posted 27 declarations. And what that means is before someone may apply on our online disaster application portal, the state and their county has to be declared. So when we declare a state, we declare every county in the state. And that's a little change from what we used to do. We used to go county by county, but now we're doing the entire state. Also, if your state is adjacent to other counties in another state that's not declared, those counties get declared also. They call them contiguous counties. So those people can go to, let's say, like here, if you're in D.C., the adjacent counties to be in Virginia, Fairfax County. Before we declared Virginia today, Fairfax County was already declared yesterday using D.C. Same with Maryland, which we have not declared any, we haven't declared the state of Maryland, but since Maryland's Montgomery County, PG County is adjacent to D.C., those counties are declared, and they can also go to D.C., they'll find their county, and they can apply. Yeah, convoluted, but that's the way it's set up. We hope to have by the end of this week, because we are working 7 days a week, by Sunday, we hope to have all 50 states and any U.S. territory that has the SALT this declaration. So now we can get to the part about the idea of loans. Economic injury loans, you can use those loans. They're working capital loans. If you're in the private sector, just consider any type of working capital is eligible for these type of loans. And any business that's in the disaster area, which we call the counties, are eligible to apply, and we'll get to the businesses that are not eligible to apply. But most businesses are eligible to apply. Criteria for loan approval, strictly this disaster, they're strictly using credit scoring, 100% credit scoring. There's no cash flow analysis and repayment ability based on cash flow. We're using 100% credit scoring. And the business has to be located in a declared county, physical location. How much can they borrow? Like Jim Hinger said, they can borrow up to $2 million, and that's including affiliates of a business. The max is $2 million. So in this disaster, we have two types of processing for disaster economic injury loans. We have a phase one processing, which is a quick and dirty processing that we take the business gross profit divided by 12 months, and they can borrow up to 6 months of gross profit as their working capital, and not to exceed $500,000. So if the business has $500,000 and annual, let's say gross profit, they can borrow up to $250,000 in working capital loan for the phase one processing. Phase two processing is a lot more detailed, and it compares a normal year with what's going on now, and it's not limited to the $500,000. Its limit is the $2 million. $2 million. So all working capital loans, the EIDL loans for coronavirus will be 30 years. All will be set at 30 years. They're going to have a 1-year deferment for the first payment due 12 months after the date of approval. So that'll give them time to recover. So the loans can be used for, of course, working capital, pay fixed debt, payroll, accounts payables, and other bills that may have come due if the disaster night had occurred.
Jerome?
Yes.
I know we're getting a lot of questions on that pay fixed debts, as far as what you just indicated on how the loans can be used.
Yes.
Okay.
So pay fixed debt is if you have a mortgage, you cannot pay off your mortgage. You can pay the monthly payment on that mortgage as if you were working normally, making money, but you cannot pay off. You cannot refinance mortgages. But if you had, like we were speaking of, the interim and bridge loans, if you borrow money as interim loan as you're waiting to have this loan approved, your economic injury loan approved, we can pay off that loan. So that we can pay that debt. But paying fixed debt, you have a machinery loan where you're paying on that loan. You cannot pay that loan off. That's important. You cannot pay it off. You should be making payments on that loan. Is that clear?
Yes, it is clear to me, but unfortunately the lenders, they're still going to be asking you about debt refinancing through the economic injury disaster loan, which again that's why I asked the question, so that they understand that. They are not refinancing any of their fixed debt. They're just making the payments with those economic injury loans.
That's correct.
Thank you. I'll change the slide.
Okay. So the collateral requirements.
Why didn't you?
We require collateral on any loan above $25,000, and the preferred collateral is real estate, but we do take other types of assets as collateral. And we also require, just like a 7A loan, any business that has 20%, a principal that owns 20% or more, they're required to have a personal guarantee on that loan. Place to apply, vaxaloan.sba.gov. There's no cost in applying for a loan. There's no fees. The only fees that we have borrowers pay is like recording fees for mortgages, UCC filing, things like that, but nothing else. And this is the ineligible entities. We don't make loans to agricultural entities, but we do make loans to entities that rely on ag. So we do make ag-related entities, but not agricultural loans like farming. We don't make idle loans to religious organizations or charitable organizations. No gambling concerns, no casinos, and so that's the entities that we don't make loans to. But just about everyone else is eligible to receive a disaster loan. Also, we don't have a slide for this, but I would like to cover the use of proceeds on what's ineligible, because this is important in the sense that when we make these loans, we also require the borrower to maintain receipts for 3 years in case they're audited to ensure that they use the loans as authorized. Can't pay dividends or bonuses with these loans. You can't make disbursements to the owners or partners unless this is just a regular salary. They can pay those. That's no big deal. They can't repay stockholders' loans. They cannot expand their business. They can't buy fixed assets. Can't make repairs to physical real estate. Cannot refinance long-term debt. We can't emphasize that enough. Cannot refinance long-term debt. If a applicant borrower had short-term debt, let's say a short-term note that was coming due in the next 2 months, and they can pay that off because that's short-term, not long-term. That's okay. They cannot pay any part of a direct federal debt, and that's including SBA loans where they were guaranteed and then we bought the loan back. But if it's just a regular guarantee loan that's being serviced by the lender, haven't been purchased, haven't defaulted, we can make payments on those loans. And we also can make payments on IRS obligations if needed. What we'd rather see is the IRS give them deferment. And that's about it for that. But back to the slide, the requirements are listed, but right now we do have some relaxations on these requirements. We need the application completed, Form 5. The tax information, 4506T, is electronic form, it's online. They do electronic signature. It's easy enough. We don't require the most recent tax return. That won't stop the borrower applicant from applying. And the schedule of liabilities, it won't stop them from applying either. We do need the person's financial statement. And the next slide speaks to other items that's needed if we have to use the Phase 2 processing. But on that slide, you really shouldn't tell your customers that we are only going to ask for this information once they apply, and if they don't qualify for the Phase 1 processing. Some businesses will be so, even though they're a small business, they'll be so large that $500,000 will not help them, and they would tell us that. So what we'll do is we'll move directly to Phase 2, and we'll ask for this information that's on the additional filing requirements, like the federal tax returns, the financial statements, current financial statements, and the monthly sales figures. Only if they move to Phase 2. And I will give you some statistics. Over the past 5 years, 95% of all of our idle loans were processed on the Phase 1. So only 5% of our loans go to Phase 2. Yep, and that's it.
Thank you so much. You should see all the questions we have for you.
Simple question. I'm ready.
You're ready? Okay, great. Okay, first question is, how is the loan amount determined for these economic injury loans?
So, and I'm going to send to you, Michelle, another little simple form we're using for coronavirus loans. The calculation will be gross revenue less cost of goods sold, gives you your gross margin, gross profit. You divide that in half, and that will be their maximum loan amount up to $500,000. Simple.
Great, thank you. The next question is, and I know you've already touched on this once, and in some instances, nonprofits can be eligible. Can you explain that?
Yes, most private nonprofits are eligible. There are a lot of nonprofits that we make loans to on roughly every disaster. The only nonprofits that's not eligible would be charitable organizations where they are just collecting items as opposed to selling anything.
Okay.
I give you an example, like Goodwill is a nonprofit. They're an eligible nonprofit. They can apply for disaster loans or economic loans.
Simply because they have the store and they sell, so they have an offshoot basically?
Yes.
Okay. Thank you. Now, we do have another question as far as a lot of lenders who have loans out there now. If you need to use additional collateral, what is going to happen to the lien position?
We will come behind them.
Okay. And again, here's that same question. If somebody has gone out and let's just say they opened up a line of credit with one of the lenders, say a credit card line of credit so that they can have some money, are they able to take that economic injury disaster loan and pay that line of credit, credit card off with your disaster loan?
Yes. We consider that a interim or bridge loan. They can pay that loan off.
And that's including our express?
That's including all 7A loans.
Okay, so anytime they've gone out, and like you indicated before, they have the receipt that show them that they have paid for their employees, they have paid for their rent, through the use of these outside third-party lenders, they can pay that off with the economic injury. We have to stress that because we're getting a lot of questions in here.
They can pay those off, and we will, we're happy that the lenders are participating. I'll give you, and I'm not sure how fast someone from the time they apply to the time they have money in their hands. In the past, even though Harvey, Irma, Maria, which was a very large disaster where we received more than 300,000 applications, the average time for we kicked out from the time someone applied to the time they were approved, that's about 3 days, and then from the time they received their first disbursement was about 30 days, it was less than 30 days.
That's very good timing.
So the process is very fast, but with only, and I'll give you some other numbers, on Monday we got the first 4 declarations approved. Tuesday we got 6 more, and by Tuesday we had about 6,000 applications using only 4 declarations. We're up to a little over 15,000 as of this morning, and we added 9 more states today. So we have approved 27 states, including the District of Columbia. And when we think all 50 states and territories come on, we're expecting anywhere from 300 to 500,000 applications.
That's a lot of businesses that need help.
Right. So any other questions?
Oh, yeah, we have a lot here. Okay. Are there any prepayment penalties on these economic injury loans?
No. Simple interest. No prepayment penalties.
Great. And you indicated about credit scoring. Are you able to release the minimum credit score that you require for these loans? No. Cannot do that by prior jury. Sorry. Okay. We also actually have a question that how is that economic injury loan dispersed?
They're disperse, and one disbursement, EFT, a transfer, I can give you a simple example. Some of these loans, people may not want the $25,000. So the only thing that they're going to need from us, so we will send out the loan authorization and the note. That's it. Once we get that back, give us their banking information, we disperse the loan.
That fast, right into the bank account.
Right into the bank account.
Okay, but as you indicated, they must save their receipts indicating what they paid for with this disaster loan for how long did you say?
3 years.
3 years. And Jerome, now, in the cap access side, we have a size test. Do you have a size test for disaster loans?
Yes, we do. We have the size standard that we use, and you can find it in the CFR, 13 CFR 120.201. The form that I'm sending you, it has a link to that.
Okay, great, because I can send it out to our lenders. We also have a question here as far as, when you mentioned about the credit scoring, it is not the SBA's cap access credit score. You guys actually use E-Tran, Experian, I'm assuming, there's 3, TransUnion.
Yes, we use Experian.
Okay. We're also receiving some questions as far as, are you guys, with all of this activity, how is your website handling the enormous amount of applications coming through?
It's been upgraded. It crashed Monday for a few hours. It crashed Tuesday. I haven't heard any crashes for yesterday and today. So it's working.
Great. So let's have these applicants still apply. Now, even though the state has not been declared, they can still go online and apply. No?
No, because the way it works, they go to the application portal. They have to find their state. Then they have to find their county. Once they have the county, then they can apply. If the county doesn't show, they cannot apply.
Okay, great.
It blocks them from applying, yes.
Okay. So we also had a question with all of this activity. Are you looking for any new employees?
Oh, yes. We have the processing and disbursement center is in Fort Worth, Texas. They have job announcements in the local paper there, in the Dallas Morning News, and the Fort Worth Telegram Star, I believe is the name of it. And they're looking for loan officers, paralegals, and attorneys. Also, we have an overflow center in Sacramento, and they posted jobs for Sacramento also, same group of people. Hello?
I'm sorry, Jerome, we're going through the questions. Mickey, maybe it would be better at this time to open up questions for Jerome, and we also have Linda Riley here. We also have Eddie Ledford here. So if anybody wants a question answered on 504 loans, Jerome for his economic injury disaster loans, and Eddie Ledford, because we're running out of time here, and we want to make sure that if anybody has some questions because Linda has to leave for a meeting. Eddie, do you have to leave? We've got meetings coming up, and Jerome, I don't know how much time you have left either, but Mickey, if you can open up and ask if anybody has any final questions, raise their hand now.
If anybody has final questions about what the moderator just asked about, please. #2. Going to our first question, caller, your line is unmuted. Please state your name and your question.
Hi, this is Carmen from the Entrepreneur Fund. And I'm just calling in regards to the auto. I heard him say that we can do an auto with a 6-month defer. So can we do a new 7A loan and defer it 6 months automatically?
It's always been an option to interest-only payments. Most lenders do that.
So they can do interest
again, if you're talking
defer.
Not sure what the question is.
I'm sorry, Eddie, what did you say? So a new loan wouldn't have a payment for 6 months if we deferred it that time frame, and that's okay?
I'm sorry, our one department left, and we just want to make sure that we're giving you the right answer. Nobody, okay.
Yeah, unfortunately, from risk management, we haven't made that type of assessment. You have to look at the merits of the credit, I believe. It would be somewhere to, coming out of the gate. If I follow you correctly, like you want to disperse a loan and immediately go into an interest-only period versus what you would normally have for like principal and interest. Is that correct?
We're wondering if you can defer it. So do the loan, fund it, and then not have payments for 3 to 6 months. Or do they have to make a first payment before a deferment can happen?
You know what, we're going to have to follow up with you on that because, again, our OFPO has left the room.
And we've asked for guidance from OGC on no adverse changes, so it's premature for us to even respond to that on the 504 side. I apologize, I have to go. I have another meeting. We are going in emergency mode now, so thank you for participating today, and more coming from 504.
Thank you, Linda. So again, if anybody has any questions for Jerome Edwards with the Economic Injury Disaster Loans, and again, anything for Eddie Ledford and our Office of Credit and Risk Management, if anybody has any questions, please raise their hands now.
Going to our next question, caller, your line is unmuted. Please state your name and your question.
This is Michael Frid with Sedco. Will Community Advantage loans have any reduction of the guarantee fee or any fee waivers or anything like that like the 7A does?
Again, everything is right now being reviewed, discussed, and once we've gotten decisions and approval, information notices will be sent out. But at this time...
And this is Rosemary Drake. So anything that covers the 7A loan program will also cover the Community Advantage loan program. It is a sub-program of the 7A program, so it would apply. Any type of stimulus that will come out at a later date will cover the Community Advantage program.
Okay, thank you.
Thank you, Rosemary.
Going to our next question, caller, your line is unmuted. Please state your name and your question.
Yes, this is Brandon. Early in the call, there was a discussion about written guidance and a webinar next week regarding how to handle late fees, I believe. And I was just calling to, wanted to check to see if that was correct, and if so, what day and what time is that call next week?
Yeah, hi, Brandon. This is John Wade. I was the one that mentioned it on the call. We're looking to schedule sometime next week. We haven't set a date at a point in time, but the idea was to be able to provide guidance to all of you on the exercise of the 1502 filing, which you know is a monthly filing that will occur next on April 7th. And we want to be able to give as much guidance and as much accommodation as we can with regards to and in recognition of the virus and the related ability for specific lenders to either file their form or get all of the information and the remittances in on time. Again, we're still developing that plan. As it becomes available, we'll be the first ones to put a blast out to everybody. Thanks for the question.
Thank you, John. I forgot you guys are on the line to answer some of these calls, but I noticed that we are well over our allotted time. But Jerome, before you leave, I do have one more question here, which is asking, do these economic injury disaster loans count towards the maximum amount of loans that one can have with SBA?
No, well, we total our loans per disaster. So for each different disaster event, which this coronavirus is a disaster event, it can have $2 million. If that business had a, let's say, earthquake tomorrow, they can have another $2 million. So it's per disaster event. It's the maximum, $2 million.
Thank you very much.
Michelle, I think I'm going to clarify that, also add additional guidance to that. It doesn't impact, so if the borrower currently has a $5 million SBA 7A loan, they still be eligible to apply for the EIDL loan as well. It doesn't affect their 7A loan guarantee.
Thank you. And Jerome, before you leave, we are getting one more question as far, or the same question. It's a repeated question as far as that formula. How did you figure it out to determine the amount of economic injury? And it would be based on the financials, which can be, everybody can apply online completely electronically, correct?
Correct, but it's not based on the financials. Only based on financials if you're going to phase 2 EIDL processing, which we only do 5% of our loans under that process. 95% of our loans will be based on phase 1 using this form, ODA form P019, and it's very simple. Gross revenue, less cost of goods sold, give you gross profit, and it's up to 6 months of gross profit, not to exceed $500,000.
Okay, thank you. And Jerome, questions are coming in for you. We've got quite a bit, sorry. And I know we're running out of time here. But will you be opening any business centers for this disaster around the country in order to help our business owners fill out those forms? Are you?
Due to the
quarantine?
Yeah, the disaster itself, we won't open any business recovery centers. We have a virtual business recovery center through our customer service center in Buffalo. So they would have to call the 800 number, which is 800.
I know it by heart. Remember, I used to work there. 1-800-659-2955.
Correct. Yes.
That number is engraved in my head.
And by early next week, we will have more than 400 call agents answering anywhere from 10,000 to 20,000 calls per day.
We have a really good question here, and I remember processing these loans for our rental homes or rental properties. Do you still have, or excuse me, will passive businesses qualify for economic injury loans?
Yes.
Okay. So over here on the cap access side, we do not provide any any funds to purchase a rental property. A lot of rental units, especially to businesses, will be affected when businesses and people cannot pay we're being told to get off the call. Oh, wait, we've got 3:30. We got 7 more minutes before they yank us. So you can offer economic injury loans to passive owners of businesses.
Yes, that's correct. We make loans to rental properties for economic injury, loss of rent. Yes, we do. And actually, that is on the form.
Okay, great. Oh, my gosh, the questions are coming in so fast, we can't even read them. Do you allow any what we call as lender servicing providers to assist borrowers and be compensated?
Yes, we do. We have a form for that too, but yes, we allow.
Is it a 159 also?
159D.
159D, okay. Jerome clarified that a line of credit, okay, here's the same question that we're getting. Jerome clarified that a line of credit or a credit card could be paid off with an economic injury loan. They wanted to confirm, because you did mention a short-term debt, but I believe you only said 2 months. But just to confirm, a conventional short-term balloon loan, not a line of credit, could be paid off with an economic injury loan.
Yes.
What? It can?
Could be, yes.
Okay.
Yes.
Short-term balloon note. Okay. And we got, I think we can get another, what was that? Credit elsewhere. The one below that. Okay, about the county, we've already answered the credit elsewhere. It does apply for disaster loans, but you had indicated about counties that are adjacent. Remember you said about D.C. is declared, but Maryland isn't, but some counties, because they are adjacent to or contiguous to D.C., they are eligible.
Yes.
Okay, so
they are actually declared.
Okay. So that was a question. Would it be better for them to apply as a contiguous county or to wait till their state?
No, they can apply now. I wouldn't wait for the state.
Okay. That's a good question. What qualifies as short-term notes? Is it less than 12 months?
I would think a short-term note is less than 12 months, 12 months or less. The normal type of working capital loan that a business borrows to purchase working capital, sell those items, and pay off their loans.
Okay. Here's another one. Okay, and they want clarification. You indicated that these loans can be as long as 30 years, and the first 12 months are going to be deferred.
That's correct. All of these loans will be 30 years, and the first 12 months will be deferred.
Okay. And that short-term balloon note, can it be a real estate loan?
Yes, if they borrowed against the real estate, or they borrowed to purchase real estate.
And it's on a short-term balloon note, they can take that economic injury loan and pay that off?
It depends on that one. Normally we don't see stuff like that.
Okay.
Most businesses don't borrow balloon notes to short-term loans to purchase real estate.
No, but if they have in the past and that note is due.
Yes, they borrowed against real estate, a short-term note, yes.
Okay. And somebody's asking about the interest during that 12-month deferment. It still accrues, correct?
For now, yes.
Okay, even though the payment is deferred for 12 months, it will still collect interest or accrue interest.
As of now, it still collects interest. There may be some change to that in the economic stimulus bill coming out, but for now, it's accruing interest.
Okay. We have 3 minutes left, or excuse me, 2.5. Is there anything you wanted to say in closing, Jerome?
I know that we just, I'm glad that there were so many lenders to listen, and I think that they can help their borrowers or applicants by telling them to go through the website and apply. We want everyone to apply. Everyone's eligible, just about. But for the few entities we discussed, everyone else is eligible.
Great. Thank you so much. And we do appreciate you coming on today's call to answer all these questions. And I know we did not get to all of the questions, so we will be trying to deliver some of this information as best as we can, even if we're going to be having these weekly calls. Rosemary, do you have anything that you wanted to say in closing, or Eddie Ledford?
Sure. I just wanted to thank all of our lenders for participating in the program and continuing to extend credit to all the small businesses and working with the agency. We will continue to keep you updated. We will work with our industry partners to get information out to you, as well as sending you emails through the SBA Connect email to get updated information as notices come out. We'll try to make sure that we are current on that information, and we will field all of your questions, continue to send your questions in, and as we get answers, we'll make sure we provide those answers to you. So again, we appreciate you, and we stay available to answer all of your questions.
Thank you, Rosemary. And I just wanted to remind everybody in closing, again, our gratitude for you taking the time to stay on this call and listen. The slide deck, we will send it out as soon as we get the list of names of all attendees. If not, we will send it out to everybody that's on our contact list. Again, thank you so much in trying to help these businesses stay open in a horrible time that we're going through right now. So again, thank you, and thank you, Jerome, for coming on the call. We appreciate it. Everybody else, have a great day and a better tomorrow. Stay safe.
Thank you.
That concludes our conference. Thank you for using Event Services, and you may now disconnect.